Master your emotions, master your risk smart.
All right, what's up everybody? Welcome back to RoyalBluFX. In today's video, we're going to quickly talk about the supply and demand zones that we trade from. Essentially, this video is going to follow the previous video that we did last week, Sunday. So this is more so in regards to the supply and demand zones that we like to trade, all right? So if you haven't seen that video, please go ahead and refer to that video. It's going to be right up here at the top right corner. I'm going to leave a link to it so you guys can go and click the video before you watch this video. But anyway, let's just begin. So in this video, I want to quickly talk about the supply and demand. The specific supply and demand zones that we trade, and they are essentially the swing lows and the swing highs. Okay, so just to quickly iterate and to let you know why the swing lows and swing highs, well, it's because they are the lows and the highs that swept liquidity. Okay, so if you look at this low here, for example, right, you can see that this low created and it swept previous liquidity, right? And if we zoom out, let's see if what we can see here. Oh yeah, right here. You can see that this high has swept liquidity from right there, right? So this swept liquidity, and this tells us that this is a swing high, that it is an unfulfilled supply zone. So that means that there are orders there, right, that have not been mitigated. So when we do this supply zone, we expand it to the right, just like this, right? What we're anticipating is for prices to fall bearish here, but as well as for prices to continue bullish, right? So there's always going to be scenarios in the market where it's either going to be a buy or a sell, or both a buy and a sell, right? And we just have to quickly be able to translate the direction. So the direction indicates based on the swing highs and swing lows. For us, this is just one of the theories, one of the methods that we use, okay? So going over here, let me see here, for example. Okay, so right here, this is a swing high, right? So we anticipate that prices could fall, but right here, this is the internal swing low, as you can see, because you can see there's internal swing low to swing high, internal swing low to swing high, internal swing low to swing high coming up, right? And this is an external swing high to swing low, which means internal structure is building bullish. At the same time, prices can fall, of course. However, if we zoom out just a bit more, you can see we have a major swing low currently creating right over here, right? So in any case, prices could look to fall here, right? We can expect for prices to also fall down here. However, we're going to continue the internal structure to see if prices could potentially go bullish here, right? So let's continue. So right over here, as I draw you guys' attention, I want you to see that right now I will look at this demand zone as a point of interest. Right now, let me just talk about this kind of quickly, because a lot of people, I think, can confuse swing lows and swing highs in terms of entering either aggressive or with confirmation. Now, when prices do approach these demand zones, we don't necessarily just look to enter them in aggressively, although you can. However, it is unlikely that price will always respect your demand zone, right? So we want to be, traders where we are risk averse and not aggressive with entries, right? So every time price comes to its suppliers' demands, we always look for confirmation. That having said, let's continue here and let's see what happens, right? We're anticipating the price would fall into here, right? Let's see what happens. So prices are going bullish. All right, we see that we do have a sweep of this high now right here, right? So here's how it becomes really handy, right? We have a sweep of the high, and here is our confirmation. We have a break or a chalk of this low right over here. So this also tells us, it indicates us that price wants to fall bearish. Now, whether it's this demand or this demand, it's either way, right? We're going to have this as our first target, right? So what we could do here is look to enter here and target this demand zone. Now, I want to show you guys here, okay? Now I can't go all the way down on lower time frames. Only reason was because the data can't. I'm not able to go farther down. This TradingView won't allow me, right? I'm too far right. Data point unavailable. All right, so we're going to generalize the area, the supply and demand zone here, right? Right there. So we're going to mark this as our supply zone. Now, the reason why we do that is because we have a change of character, chalk, right? This high here swept liquidity. We have an internal chalk right here. So this should validate the reason for us to take this sell right over here. right? And there we go. And of course, another thing that validates this sell is essentially this swing high here. This swing high swept liquidity here, which means this is an unmitigated supply zone right here, right? Which means that we should, if we're respecting the supply zone, we should look and anticipate for prices to reverse here. So not only do we get an internal sweep of liquidity, but we also got a change of character here, and this validates the reason for us to actually sell it here, right? So let's see if it goes. Okay, boom, we tap the demand. So here's what I'm looking for, okay? Just because price gets to a demand zone doesn't necessarily mean prices, will continue bullish, right? I have one of two theories that prices can always do. When prices get to a demand zone, we have what's called the first buyers or the first sellers, right? The first traders, essentially. When price gets to a demand zone or supply zone, you see the first move, right? You don't want to trade the first move, because these are traders that are saying that we know it all, we know where the direction's going from here, right? They're trying to set the direction, or they're at least predicting where the direction's going. So what I always tell my traders is to trade what you see, not what you think. Okay, so in this case, I can see that this is a swing low here. You can see price swept, right? I can see that clear, right? But we need to be traders that are risk averse, so we need to see a change of character in here on this demand zone. So far we don't see anything, right? Look at what happened here. So this is the second expectation. Second expectation is that also swing lows and swing highs are also meant to be swept, right? They're also meant to be swept because there is liquidity under here. Why? Because a lot of traders are here and here, are expected to buy in a demand zone. That's just the sort of the psychology behind the market in trading, right? So you can trade everything technical, but you also have to obviously, you also have to integrate your psychology in this as well. Right, so what we always do is we use supply and demand as a skeletal structure just to kind of see where the orders are and where prices is flowing, essentially the order flow, where the order flow is going, right? But we also need to add in a bit of our psychology. So this makes a lot of sense. Price swept a swing low, right? And now what I'm expecting here all the time, right, just because the buyers didn't go up from here, right, the market didn't go up from here, we can still anticipate that prices are swept and still continue going bullish here. So what we're going to expect is a chalk here, right? Now, I could be wrong, right? I could obviously be wrong. Prices could fall here too. However, knowing that we back test this all the time, this works dime a dozen. So what's happening here is we are setting ourselves up for a good entry here. You can see here this is a wick, which means market never close below, right? In our structure theory, we always teach that, in order, if it was to go bearish, we need a candle closure below the low, not a wick closure, okay? This is just a quick whiplash. It whips the low and it runs the high, right? You can usually use your line chart as well. You can see that we're still within the demand zone. We haven't actually broken the low. So let's see what happens here. Okay, so there you go. We got a break. Here's what's interesting, okay? This is a wick closure above, right? So yes, that is a wick closure. This is also a wick closure below, but that doesn't mean that prices cannot run bullish from here as well. So we're going to use both of these. I'm not able to go down and refine the order block. You know what? For all good measures, I don't know. It's this whole area, honestly. It's this whole demand zone. If I'm able to go down a lower time frame to refine it, I would refine it. However, I can't do that right here, right? So let's do this. So this to me would be the entry. Why? Because we do have a swing low, sweep liquidity. We also have a change of character right over here, which means this is a confirmed entry for us. So let's continue from here. We can look to buy, right, and look to risk whatever this is right here, right, just like this. Let's target liquidity above. So we're going to go ahead and target the liquidity above. I already see this is a sell here, another sell. This is a bunch of liquidity. If we go even higher, we can also see there's a bunch of more liquidity there. That's a swing high. We can also see above this internal swing high that there's a bunch of more liquidity there. So it is safe to say that this would be your first target here, right? Second target here, and third target here. You can take some, partials obviously along the way. I would bet that price would come all the way up here though, honestly. This would be your last take profit there, right? So let's see what happens. I could be wrong, guys. I don't know. Let's just see. It's my first time seeing it. All right, so we are bullish here. Everything's moving nicely, right? As soon as price breaks structure right here, this high, I'm already at break even. So once this breaks, right, I'm already putting my stop loss at break even here, right? I had my stop loss here. Now I'm putting it break even. Now this is where, when the swing lows are swept or the swing highs are swept, or when we see a swing low and a swing high like this is where prices tend to generally run fast, right? They're impulsive here. So let's continue. All right, we are break even. Whoopsie, I played this a little too quick. Okay, there we go. So we got first TP here, right? We got second TP here, third TP here, and then we can close the rest at this high. Let's see if prices can run. This is actually pretty nice, to be honest. All right, there you go. So we just closed the rest of the trade over there, right? So again, I just wanted to iterate and show you guys how this works. It's very easy. I want to show you even in these examples right over here. We had a sweep of the low, right? So this becomes a swing low, right, to a swing high, right? It broke this high. However, this swing low was unmitigated. We wait for price to get back here. You can enter here aggressive, or you wait for the change of character with the flip. Here's your sell to buy. That's your flip. The internal flip also is a swing low, which took out liquidity, which is a POI, right? A point of interest for us to look for entries here as well, right? Something like that, right? So this is how it's done. If you can see this example here, let's go right over here. We did the same thing over here. You can see we swept this low. You can see that clean and clear, right? This is all I look for. One of the main three scenarios that we always look for. We look for a sweep of the low, right, or sweep of the high. In this case, sweep of the low, ran, broke, right? Or you can even call the internal chalk, the change of character right here, right? It broke this, right? It came back to the demand zone, right? So this is the unmitigated demand zone, right? Prices tapped and went off. Now, you didn't have to take an entry there that aggressive, right? You could always wait for the chalk or the change of character. We had a breakdown there. You can see that liquidity was swept. You can see prices here were also broken, right? The high. So now we can go back in here and go ahead and look for the unmitigated swing low. This looks like a swing low in there actually, because you can see that this candle here went below this previous low. It's our candle per candle strategy here. You can see it though. This candle right here, this bearish candle, swept that low. So prices ran. This is the flip, which means this is our POI, and this is where you can buy from there, right, for another TP. All right, guys. So I hope you guys learned a thing or two about our favorite ways to trade and depict the direction. If you guys like this video and you have questions, go ahead and comment down below. I'm always curious to see what you guys are thinking, what you guys want to learn, what you guys want to know. Until then, guys, I will see you in the next video.